David, is the scenario you're painting a mild recessionary scenario, or is it something a little bit worse than that? Because the consensus seems to be that we're going to get a mild recession. Is that your view too?
No, the assumption, Guy, we're assuming that we're making is that we have a soft landing, which is to say the U.S. economy continues to grow on average around 1% next year, so modestly. In that scenario, you have no earnings growth. That's an optimistic scenario, if you will, and you have stable kind of evaluation. The scenario in a hard landing that you posit, what would happen in the event of recession? Well, historically speaking, earnings fall during a recession by around 13%. We have a scenario, when we look at some inputs, that would lead to earnings falling by around 11%. So put some numbers around that. That's like $200 of earnings per share next year. Our baseline is $224, $224. $200 and a 14 multiple, but as you look forward, that would put the S&P 500 Guy around 3,150. So think about that as your downside, maybe 20% lower. Again, that's a scenario, not a baseline, but a scenario as opposed to a market falling maybe 10% to 3,600 before ultimately rallying back to 4,000. So I think that's the way we think about it. It's the way I think about it. Again, baseline assumption is a soft landing, not a hard landing or recession.